moving the needle on founder failure, one conversation at a time. I'm your host, Justin Gordon, and welcome to Startup 2.0 by Spark XYZ. Join us each week as we give you access to some of the top investors and entrepreneurs in the country to help you think through and overcome the top challenges that startups face. Today's guest is Elaine Russell, who is a partner at PLG Ventures, which is one of the most active early-stage venture funds here in Southern California. Elaine, welcome to the show.
Thank you. Thanks for having me.
Yeah, with PLG Ventures, what areas is the firm focused on investing in? Just want to start there.
Yeah, so we invest in pre-seed and seed, pretty much anything before the Series A, and generally software-based companies.
And then with that too, is there a certain check size or a range of check sizes you typically have as well?
We will write a check up to $250,000 in initial investment.
Okay.
And then we have done many follow-ons as well. So our full stake will go up higher than that when we have conviction. But
Yeah, and then with PLG too, is there a certain investment thesis you kind of work off of, investment strategy you have with the fund?
Mm-hmm. As many other venture firms will probably say, but we do firmly believe that we're investing in people, especially when you're looking at pre-seed companies. So we are really evaluating the founder, and we're trying to find a company and a founding team that not only we can build a relationship with, but we also see that we can add value in certain areas, and we can identify those areas early on. Outside of that, we are industry agnostic, so we will invest across different industries. And as long as the idea is novel and the market is big, beyond those two things, it is really a connection that we need to feel we have with the founding team.
Yeah, and then with the structure as well, with being like a family office, how does that change things? What pros, cons of that? Like, how does that even go for you guys then?
Yeah, so we are a family office venture firm, which means that we have a single LP, and we do not have, we don't have to spend any time fundraising. So most
Nice.
other funds allocate a large percentage of their time towards their LPs and their fundraising efforts. We can focus solely on our companies and doing investments. But beyond that, how does it affect our investments? It allows us to be a little bit more opportunistic, I'd say. We have tried to narrow down our investment thesis a little bit, just for the sake of making investing a little bit easier on us, and also easier from a talking to other people in the industry and describing what an interesting deal would be for us and how we can receive deal flow. But reality is that we don't have any mandates from LPs, and we can invest in anything.
Yeah.
So there have been cases that we've done things that are a little bit later stage, and we've evaluated very late stage opportunities when we think it is a fit. It doesn't change our check size, but we are opportunistic at the end of the day, and that is because we're a family office venture firm, and because we are doing this for a financial return, but also I think there's some social good aspect to what we're doing, and we need to feel like we are enjoying the companies we're investing in, and having fun while doing that too.
Yeah, and then going back to that investment side of it, then what does that diligence process actually look like for you guys then at PLG?
That depends a little bit on the stage of the company. So if you're looking at pre-seed companies, which I'll define as really just anything pre-launch maybe, the diligence is really in meeting the people, right? Meeting the team. Hopefully there is a team. That is something we look for, even if it's a very, very small team. But there is usually more than one person involved in the company at that time. So the diligence process is usually pretty quick. You need to meet myself. You also need to meet my partner, Peter. Sometimes he meets them first, or sometimes it doesn't matter where you come in, but we both do need to meet the person.
Yeah.
And that usually involves 2-3 meetings diligence questions about, again, if it's pre-seed, it's a little bit more focused on what their vision is and what the problem is that they're solving, and make sure that we buy into it and we think that they're the right people, the right team to implement and execute on that idea. If they're seed or let's just say post-launch, then there'll be a little bit more diligence that we're going to do. We're going to actually look at traction. We're going to look at the financials and get a little bit deeper into the actual business that they're running. Yeah, and are there any red flags in that process, things that kind of, okay, that's a no right away, or anything like that within that process? Yes. I would say the most blaring red flag that unfortunately you do see sometimes is dishonesty. And it doesn't have to be outright dishonesty, but even embellishment. Yeah. We're really looking at investing in the people, again. And so if we feel like we can't trust that person, that is a red flag for us. And we are both past operators. I'm a past founder. And so we both really understand how hard it is to build a business, and how the fact that there's a meeting where you have this fancy pitch deck and all these brilliant ideas and ambition and all this stuff, but there's also the reality, and the reality is probably pretty it needs to be honest. Yeah. It's probably not that rosy at the time we come in, because this is an early stage startup. Right. So, if you're not able to admit to us that this is hard, and that that there's a lot of upside, but there's also issues that you've run into, and here are the issues, and here's how you're going to fix them. We want to see that vulnerability. Yeah. And so somebody that came in and say, we're going to take over the world, I want to hear that. But if they back that up with anything that includes embellishment around facts or any sort of dishonesty, sometimes that comes out in the form of being a little overconfident on fundraising, or even just elaborating on traction. Yeah. Those are red flags for us. Yeah, and then kind of on the opposite end of that too, looking at these different companies and with the experience that you have as well as your partner as well, I mean, are there any things specifically that help a company stand out, or things like, oh yes, I'm so excited to invest in them? Anything particular in there? The main thing is probably, it goes back to what I said, that building a company is really hard. And so there are going to be many moments in the history or the timeline of this company that you hit a brick wall, or you feel like, should I just throw in the towel? Like, what am I doing? This is so hard. It's going to impact every part of your life as a founder. And so I want to see somebody that isn't going to stop. This person, you just feel like they're going to make it work somehow. Like somehow they have skin in the game. It doesn't have to be capital necessarily, but they have put all into this. This is their 110%. And there is a lot on the line for this person to make this successful. So you just get that feeling like when you meet somebody like that, that you want to follow them, because whatever they run into, all the hardship that they're going to run into during this process, it's not going to stop this person. Yeah. And how are people typically finding you or finding PLG Ventures? I don't know if you can tracking this exactly, but how are different companies and startups finding you, and how does that deal flow kind of work for PLG Ventures? Yeah. I'd say our deal flow comes in a couple different forms. And this is probably a factor, and I guess a output of our check size. Because we write smaller checks, we are always co-investing. We are never doing an entire round, most likely. If somebody was only raising $250,000, probably wouldn't be the right round for us, because you'll most likely run out of capital too quickly. Yeah. So in almost every case, or I'll say in every case, we are co-investing. So we are actually a really great piece to the puzzle when somebody is doing a raise. And so we get a lot of deal flow from other venture capital firms that are rounding up other investors to finish a round. They might be the lead, or they might also just be a co-investor, and they say, hey, you know, there's a piece of this pie left over, and PLG would be really additive and the right check size for that. The other side of it is we get a lot of deal flow from our entrepreneurs. We have almost 50 portfolio companies now. And so that is 50 sets of founders. Yep. So, you know, all of those founders, pretty much every one of them has sent us companies in the past, whether that be their friends, whether that be their network, whatever it might be.
Yeah.
And we actually, the other two buckets I would say is we actually get a lot of deal flow from even founders that we've turned down in the past, but we've kept up great relationships with. And we are always very conscious of how we turn down founders, try to be transparent, very quick in our answers, and helpful when we're able to. And then lastly, service providers. So we built, you know, a slew of relationships across legal, across HR, you know, recruiting, and a lot of these firms really see entrepreneurs first, you know, whether they're incorporating or doing their first hiring or whatever it might be. And so they're able to refer deals to us too.
Yeah, and one of the things you mentioned earlier with how difficult it is to start a company, what are some of those challenges that you see entrepreneurs facing early on?
I think that given we are usually coming in that first institutional round, the most common thing we hear is we tell somebody you need to have a team before we can invest in you. And I know they're either thinking it or they say it out loud sometimes. How do I get a team before I have money? And so there is a little bit of a chicken and the egg situation there. Yeah. Because you would think, well, you know, how do you pay somebody? And obviously we don't want to only invest in founders who have their own capital to bootstrap the business. But that goes back to what we're looking for in an entrepreneur. I want to invest in somebody that can persuade people to follow them before there's even capital. And I know that's not easy, and that's much easier said than done. But it's even more impressive when we can find somebody who's rounded up a team. And it could be one other person. Their team could be their co-founder, and that's it. And that's fine. But, you know, kind of persuaded people to follow them and to build this product or company with them before there is funding. Because once you get to that point and you have money to pay people, it becomes a little easier to find people to hire because you can actually pay them. So
more incentive, yes.
Yeah. So it's even more impressive when you can do that before the capital comes.
Yeah, so building a team is one of the main challenges that early startups face, and that's something...
Building a team before they have capital.
Yeah, before you have capital, which you have to be scrappy and figure it out as an entrepreneur. Are there any other kind of main things you see besides those team issues or building the team to begin with? Any other kind of issues that you see these startups facing when you have them at PLG?
I think we also... because of the amount of attention the venture capital industry has received in the past 5 years plus, but really past 5 years maybe, I think there's a lot of different types of businesses that now think that they should take in venture capital. And one of the most common pieces of advice I give many founders that walk in our doors is your business, like, you are not going to be set up to succeed if you take in venture capital. And so, you know, I encourage them to think very thoughtfully and be calculated about whether they should be taking in true venture capital. And then there's a difference between, you know, we almost sit a little bit in between because we are not a, you know, traditional venture capital fund with LPs. Right. So we do have more flexibility in that. But then there's a whole nother realm, but we have set ourselves up as a venture firm looking for venture returns. There are many other family offices or angel investors that are looking for different things in their investment in their investment thesis as well. And so I encourage entrepreneurs to always find their fit, find their investor fit. Is that venture capital? Is that more family offices? Is that strategic angels? And that should be based on the expectations for returns.
Yeah, and thinking about that too, though, what questions should they be asking or thinking about when trying to decide what type of investment they want in their company to begin with, or even if investing right for their business, what should they be asking or thinking about?
They should be thinking about, before they come to us or whatever, they should be thinking about being very honest with themselves, what they want personally out of this, and what sort of return they truly think their business can provide. There are plenty of amazing businesses that will generate cash flow in which you could live extremely comfortably off of. And should that entrepreneur be giving away a large piece of their business to venture capitalists to own, and versus owning all of it and being able to actually make a really healthy amount of money each year? There's a lot of trade-offs there, I think.
Yeah. How's that conversation go when people maybe have a business that should be more of a lifestyle business versus a venture-backed business that you have with people?
And I don't really like saying lifestyle business. I mean, because I think that gets that gives it, for whatever reason, people think that's a negative thing, or like they're not trying hard enough, that they've only created a lifestyle business. I think some of the most successful people out there created businesses that were not venture-backed traditionally, and they got really far without that type of capital. But what, again, I think they just have to be, for whatever reason, venture capital has become almost a status symbol for people. And I think that's the wrong way to think about it. It's a goal people have to be able to get funded by a venture capital firm. And I encourage them to talk to more past founders that have taken in venture capital. And more often than not, when they're a second or third time founder, they try to avoid it for as long as possible.
No, thank you.
So, do your diligence beforehand.
Yeah. And assuming a company has the right fit for venture capital and they have maybe the right team, from there, what are some of the reasons maybe that startups fail? If they've had those two things, why do they fail? Because obviously so many of them fail, but what are some of those reasons that you've seen at least that why startups fail?
Yeah. So that's a good, shoe-in question for what PLG focuses on.
Perfect.
Because what we do is we focus very heavily on organizational behavior with our companies. And that is directly because we believe that is the biggest reason of failure at early stage when we are talking about pre-seed and seed. Founders sometimes just don't get the foundation right for their business. There is plenty of examples out there, and it becomes a matter of time of when that's going to affect their business. It may be able to sustain for a good period of time, and it's not till they're pretty big and large that they start to fail. Or it could fail really early on because of that. But we focus on organizational behavior and helping entrepreneurs build the foundation for their business. It kind of goes back to not just building a product, but building a company. And so we have 4 different pillars that we focus on with our founders. First is leadership development. Second is how to retain top talent. So it's not just about hiring really qualified people, but how do you keep them happy and how do you retain them? And then third is co-founder relationships. That is a massive area that can cause companies to go through a lot of hurdles. And lastly is how to build culture early on. So don't wait until you have product market fit and you're growing the team every month. build your culture before so that you can hire the right talent into it. And we work with third-party service providers basically for all of those different areas. And then also obviously one-on-one with our companies as well.
Yeah. And like, what does that look like? Just going deeper, what does it actually look like with incorporating those 4 pillars into working with these startups?
We do not actually have a traditional method of how we implement those across all of our portfolio companies. I guess the answer is it depends.
Yeah.
Some companies don't have co-founders. It's a solo founder. So that third bucket is actually just sort of irrelevant for them.
Yeah.
A lot of them do have co-founders. And so that third bucket is very important to them. Some people we help a lot on the hiring and employee side, and some people don't need that help as much. So it does sort of depend.
Yeah. And then getting that word out about that for being a strong point of PLG, how do you mention that? Is it in every conversation you have with founders, like, here, this is what we do, or how do you get the word out about that?
Pretty much everyone. Yeah. I mean, I think that also a really good piece of advice for founders when you're talking to investors, it's obviously, you're going to feel like you're being interrogated by the VC because they're making a decision of whether to invest or not.
Right.
But once you get to a certain point, I would encourage entrepreneurs to question the VC just as much. Like, why should they be the right partner for them? And so this is what PLG brings to the table and what we do. And so, that part of it, we leave it to the entrepreneur to see if that's something that they're looking for.
Yeah. And is there anything else with just being a family office that gives you an advantage? I know you touched on that earlier on, but I'm just curious if there's anything else that PLG, is there anything else with being a family office that gives you an advantage, or as you see as helpful for running the fund?
Internally or for the entrepreneurs?
Either way, internally or for the entrepreneurs.
I mean, internally there's tons because I'd be curious to see what the percentage of time you think most partners at funds spend on fundraising themselves.
With their LPs,
it's sort of the secret that entrepreneurs don't always realize. VCs are fundraising just
They're
as much.
They're also fundraising. Yes.
And so, it's very time consuming. And I don't know what percentage on average funds spend fundraising, but let's say it's 50-50.
Sure.
We have just 100% on investing, 0 on fundraising. So that's a major time advantage that we have.
Are you able to be more hands-on because of that then? Or just depends on
time?
Depends.
Yeah. So, I mean, you can allocate that to doing more investments. You can allocate that to spending more time with your companies. Right. Either way, but
just important for entrepreneurs to also understand that if their investors are a family office, they had that flexibility potentially, but just depends.
It
just depends.
Yeah, and I guess for entrepreneurs, we also just can be flexible in what we offer, and can be a little bit more aligned with them because we're going to give them advice that is usually really in their interest.
Yeah.
Because we don't have the same pressure on returns. Obviously, we want to make a return, but but they don't necessarily need to return the fund. A lot of partners, and that's just how fund dynamics works, right? You need to return the capital to your LPs before you start to make any money on that fund. Right. We again don't really have that, so we can be a little bit more flexible.
Awesome. A big heartfelt thank you to Brex, who without their support, this show would not be possible. We've seen firsthand the difficulties accessing basic corporate credit without providing a security deposit or personal guarantee early on. As companies grow, managing expenses has become more difficult and time consuming, which is why we've partnered with Brex to offer a corporate credit card that is not personally guaranteed, offers higher credit limits, provides auto reconciliation, and integrates with ERPs using receipt capture. Brex is the credit card of the startup ecosystem, and we highly encourage you to check them out. What are you most excited about now in terms of what you're investing in, different areas you're investing in? What are you most excited about?
So let's see, I run most of the consumer side of things for PLG Ventures. Again, we're industry agnostic, so we do invest across industries. I'd say the three big buckets that we look at is consumer broadly. My partner Peter has a finance background in the banking world, and so we do a lot of fintech / real estate tech.
Yeah.
And then we do a lot of B2B SaaS, just software plays. And so what am I most excited about in terms of just me personally? I enjoy looking a lot at the future of retail, I would say. So this is on the consumer side, or it's B2B2C, but somehow affecting how the consumer experiences or consumes going forward. So that does not necessarily have to be e-commerce specifically, but just the entire efficiency around the environment or around the industry and the consumer experience.
Yeah, and then being as an investor the last couple of years, but also having a ton of product experience as well. I mean, how have you seen the venture community change in the last 2 years, and where do you see it? Is it going, or see it changing in the future?
I think that I'll be even a little bit more relevant to today. I would say what I've seen change just in the last few months, maybe, and how I think it's going to change going forward.
Sure.
I do see venture becoming more focused on margins and more focused on unit economics, and a little bit, just you can see some recent examples in the news today that are causing some uncomfortable uncomfortable feelings out there, I would say, about throwing a lot of capital at companies early on before some of the model is actually proven. So personally, I would rather invest in businesses that we feel like they are close to or have figured out that model and are being very conscious of how they scale. Have you already noticed at all that companies are changing in that way, seeing where the venture capital kind of community is going in terms of trying to get more on the margins itself, or it's just slowly happening that way? I do. I think that everything is a outcome of where the capital, how free the capital is going to be, how much capital they think is going to be available for them. So if anybody is worried that the capital might restrict in the future, then they're going to change their behavior so that they're not, or they should change their behavior so that they're not put in a bad situation in the near future. Yeah.
And then one thing we haven't really touched on much with your product experience, like how do you use that for your portfolio companies in terms of how you're helping them and how you look at different investments? Where's that product kind of knowledge from before kind of tie into what you're doing now?
I guess that's sort of, it's one of my passions in life is products, software products, I would say. And a lot of times that's consumer-facing products, or that's, everything at the end of the day is built for some sort of consumer, even in a B2B SaaS platform. And so it's certainly something that we're evaluating when we are making an investment decision. It's something that I am involved with in terms of how solid do I think that the product is or is being built. But after we invest, that's the fun part for me, is getting involved and helping on the product side as well.
Yeah. And then one thing too from before, we kind of mentioned a little bit with questions that entrepreneurs should be asking their investors, and you have experience as an entrepreneur as well. Just diving a little bit deeper into that, what are some of those maybe critical other questions we haven't maybe touched on yet, or just going deeper, critical questions that entrepreneurs should be asking investors?
We talked a little bit about, them making sure that the investor they're talking to is a good fit for them. So I definitely encourage people to ask the investor what they're looking for in investments and how they're going to add value to their company specifically. it depends on the stage that they're at, but inquire about board composition, their views on that, whether they're going to be involved in your board. And, at the end of the day, it's not just about receiving money from somebody, but they should be very strategic, and it's a puzzle. You want to make sure that you don't have 5 of the same type of investors. If you get one investor that's really good at the network, then find an investor that's really good at the internal side of things, and find an investor that's really good at the marketing side of things, whatever you need, right? But it's a puzzle. And so it's really about finding complementary investors to sit around your table and help you build a company.
Yeah. And how does that change though? Because as a company that they're trying to get their first investor, and once they have someone on board, does that evolve where they can be like more picky in terms of who they're looking for? Because early on they just need cash to survive. Like, how does that go at different stages?
And so I guess in most cases, not all, it depends on if they're raising a certain amount, but certainly if they're raising over $1 million, usually they're going to look for a lead first.
Yep.
And I guess you're right. In terms of a lead, it can be any one of those puzzle pieces first, right?
Sure.
But it is even more important for you to have a good feeling about that investor. They are going to be with you for the rest of your journey.
Yeah.
And so just having that gut feeling and that personal relationship, make sure that you feel like you're going to get some time and some time allocated from that person, and then whatever piece of the puzzle they check, then you can figure out the rest of the people.
Yeah, you can kind of go from there too.
Fill in the blanks. Yeah.
And then even looking at with PLG Ventures, then are there certain other venture firms that you have partnered with multiple times that you continue to you have that relationship with, or if they kind of send things back and forth? I'm just curious on your fund and how that.
There are, we invest with, I almost would say, majority of the LA venture firms here, and I guess given we're industry agnostic, there is not just one that is our go-to partner, and we co-invest in every deal. It's really dependent on the industry, and so there's players and funds that we really respect in their specific industries for sure. Yeah.
And for you, going from an entrepreneur and being in product to then VC, is it what you expected?
Yes and no. I think overall, yes. I think that, I spent most of my career kind of on the other side of the table. And so it is, I think in the very beginning, I had a lot of what I called founder guilt. It's hard to say no, and you had to learn how to do that because majority of the time we have to say no. We can't invest in every company we see, and I hear so many good and interesting ideas, and I meet so many amazing people. So that's the best part of the job for sure. And then the worst part of the job is saying no to almost all of them.
Yeah.
But I really try, and I think most of us do, to be helpful to majority of those people that I talk to in some way, even if it's a very small, here's another investor in town that you might be interested in speaking with, or might be a good fit for you, or here's, someone who could be a great marketing asset for you, whatever it might be. But I try to be helpful, and even if that's in feedback and really being specific around suggestions and feedback to a founder. Sometimes that's helpful too.
Yeah, and with that too, kind of how is your day broken up, or how is your time spent at PLG Ventures?
Every day is different. So I don't think there's necessarily a formula for every day, but we spend a portion of our time in pitch meetings. So speaking to companies for the first time and hearing their pitch. We spend a portion of time with our portfolio companies, And that goes in waves for each company. You know, we'll spend a lot of time with one company when they're in the middle of hiring senior people or going through a big negotiation with big partners or doing their next round of financing, whatever it might be. And then they might go a little bit quiet for a while and we're not as spending less time with them. But we do spend a good portion of our time with our founders. And then lastly, well, actually, two more buckets. One would be diligence. So we do spend some time making these investment decisions once we've deemed something, a pitch interesting, doing that deep dive. And then lastly, I would say just sort of we spend time building out our networks because it is a network industry. And so in order for us to be relevant and have deal flow and also build up our network that we use to be value add for our founders, we spend time on that as well.
Yeah. And what does that look like typically? I mean, because there's so many ways you can go out in the network. Is just always trying to go to events? Like, what does it kind of look like?
Yeah, I mean, it's events. It's talking to building relationships with other VCs in town or in other towns, with other all of those areas of deal flow that I spoke to. Spending time with just really smart people who might be an entrepreneur soon, and all of that kind of goes into my networking bucket.
Yeah, and one of the things that you've talked about with your partner as well. Like, how are those decisions made between you two on investments? What does that look like exactly from there?
Yeah, I mean, given we're two people, we do look for a unanimous vote. So it's you need 2 votes for us to make an investment. So it's pretty simple. Peter and I talk about it, and usually one of us is sort of leading it in a way, even though we've both met the company and we both are working on the deal. And sometimes it's a little bit longer of a discussion, and sometimes it's a very easy discussion. But given it's 2 people, it's not a very lengthy process.
Yeah, I mean, definitely much easier with 2 versus I have a whole team of people as well. And like, how many investments roughly? I don't know if we talked about this, but how many investments roughly a year are you kind of going for or aiming for?
Aiming for about 12 to 14. 12 to
14. Okay, so then if you have any idea of the number of companies you're looking at throughout a year?
Yeah,
just curious.
I think we looked at in the last year, I think it was 500 or 600.
Okay, and evaluate down to that many then, and have
and those are companies that we've actually spoken to, or either on the phone or in person.
Yeah, had meetings with. And then, is there anything else with advice for entrepreneurs as they're going through raising, either whether it be just growing their company or even looking for investors? Any other advice you'd tell them?
Might sound cliche, but focus on the people. Sometimes people have such a specific idea of a skill set they need to hire for, or a level of seniority, or that their co-founder has to be a perfect complement of their skill set. But at the end of the day, again, just follow your gut and when you're hiring, and even if you find someone that maybe doesn't have exactly what you're looking for, but you think they can do it, and they just seem like the perfect person for you, from a culture standpoint, from a personality standpoint, and just happens to be the smartest person you feel like you could hire. Hire A players, hire the best people you can and be opportunistic.
Yeah, I mean, on that point too, I mean, because hiring is so important, is there anything else you'd mention to them? Because I mean, so many teams or so many people struggle to find those hires or even to have the right co-founders. Anything else on like how they can vet them or where they can go to find co-founders, or how that even goes?
For co-founders specifically?
Co-founders, I guess it could be their first hires, but how they go about that process, because it's so challenging.
Yeah, I think it's my opinion, and I'd actually, it'd be something I would love to hear as many people's opinions on the matter as possible. But I think it's really more of an art than a science. And the more people you talk to, the more chances you have at finding that person. So get out from behind your computer, meet people, talk to people, be open, be vulnerable, and be passionate. You know, the way that people want to come on board is because they want to follow you,
Right.
you know, and you've sold them on the idea and they just can see it, you know? So.
Yeah. Yeah. And where can people go to learn more about PLG and connect with you as well, Elaine?
You can learn more about us on our website, and we have all of our portfolio companies listed on there as well. I think the best way to, if you are an entrepreneur, I think the best way to meet with us is to find some sort of mutual connection that we have. We love when that comes through some of our portfolio companies. There's 50 of them.
Yep.
Or if it comes through somebody we respect in our network. But really, when contacting any VC, I suggest entrepreneurs to find the best or closest person they have to, because it does mean a lot when certain people we really trust recommend a company to us, that is meaningful.
Yeah, hold some weight versus a cold email. Do you get a lot of cold emails? I assume you probably do still,
yeah,
but
we do.
It's definitely helpful to have that warm connection. But Elaine, go ahead.
We also have a area on our website where you can submit your business plan and your an idea. It actually asks for a small video.
Oh.
So there are cases where an idea or a person just stands out so much through that cold submission process.
Yeah.
That we will reach out to them and set up a meeting. But more times than not, it is coming from more of a warm introduction.
Yeah, makes sense. Elaine, thank you so much for taking the time to come on today.
Thank you.
Thanks for checking out Startup 2.0 from Spark XYZ. If you want to learn more about startups and investing, you can check us out and join the ecosystem at sparkxyz.io.